Now, today's market moves make it very clear to many investors the cake is already baked. In this case, we're talking about a rather splendid, looks like a sponge cake with icing. Now, the threat of tariffs, the mixture that put it all together. Well, the president can add icing and trade deals and countries like Japan, Vietnam, South Korea, but it may not be enough to prevent the cake of recession, because at any given moment, the ingredients are already there. The disruption from the federal government's restructuring, the tariffs, the uncertainty on reforms. Mark Zandi is the chief economist at Moody's. Mark is with me. You can't see this, Mark, but I have a splendid cake in front of me, which certainly doesn't look anything like a recession, I have to tell you. But you know what I mean. The cake, it's always baking because there are always new ingredients. At the moment, the economy is very weak. And the inflation number this morning we saw suggests manufacturing and other things, like the demand is falling off strongly.
Yeah, I'm very curious in the cake metaphor. It sounds like a good one. My first question is what kind of cake, but aside from that, I just listened to your clip of Treasury Secretary Yellen's comments, and I don't think I could say it any better than that. I think the trade war is a massive self-inflicted wound, and I'll go so far as to say I think odds are that we will suffer a recession. The global economy will suffer a recession. The probability of that is now well over 50%, probably closer to 60%. And lots of different ways the trade war is going to hurt the economy. The most obvious is it's a tax increase, a massive tax increase on American consumers and businesses in the form of higher prices for imported product. And if you do the arithmetic, it's about as large a tax increase as we've seen since any time since 1968 during the Vietnam War or World War II. So pretty significant financial statistics to digest for households. And I do think recession is much more likely than not at this point.
And of course, we also have just, as Secretary Yellen was saying, there is the totality of the complexity of what's happening. For instance, the uncertainty about jobs as a result of restructuring from the federal government, hundreds of thousands of people losing their jobs. Now, you or I or friends may not be immediately affected, but it makes everybody very uncertain about what's going to happen in their company, what's going to happen in their contracts for their company. And that in itself becomes a self-fulfilling prophecy, does it not?
Yeah, absolutely. She called it an uncertainty shock, and I think that's exactly right. I think the stock market yesterday had a good day because the president backtracked on his so-called reciprocal tariffs. But I don't know. We got 90 days of debating what's going to happen with these tariffs. Are they on again, off again? Which countries, which products? It just the uncertainty is a miasma, over the economy's performance, and that'll continue to be the case. And it's already evident. I mean, the Federal Reserve Board has point blank told us that they're not going to move interest rates any lower because they just need clarity around economic policy, and of course, they're not going to get it given the fact that those reciprocal tariffs were put on a 90-day hold. So, yeah, I think businesses, consumers, investors, policymakers, all uncertain, and at this point they're sitting on their hands, but at some point they're going to start cutting, and that's a recession.
The Fed's in a really difficult position because at these sort of numbers, it doesn't matter the reason why, but at these sort of numbers on inflation, legitimately they could continue with their easing policy. And certainly, but they can't because they've got more inflation coming down the road from tariffs. And yet at the same time, if there's a recession, this is the classic definition of stagflation.
Yeah, what's the Fed to do with this, right? You're right. Inflation is coming. We know that as the tariffs are imposed, prices are going to rise. Inflation expectations, what people think inflation is going to be in the future, have already risen to a significant degree. All of that argues for the Fed, all else equal, to raise interest rates. Mm-hmm. But on the other hand, the tariffs are going to do real damage to the economy. We're going to recession, cost jobs, growth is going to slow, go negative. that would call for lower interest rates. So you're sitting at the Fed, you go,
Yeah.
well, what do I do with this? Right now, their answer is nothing. They're just sitting on their hands because they don't know what to do. They don't know how to respond to it, which is, that's the problem with stagflation at the end of the day.
I'm feeling very, very guilty that here I am with a marvelous cake in front of me and you don't. So we'll send you a cake. Are you more of a vanilla slice or are you more of a chocolate man when it comes to a piece of cake?
I like variety, Richard. Variety.
Oh,
I'll take a slice of each. Could we do that, please? Thank you.
we'll find a slice. We'll find a multi-layered, multi-choice cake for you, and we'll have it sent to you in South Carolina. Good to see you, man.
Thank you
you very
so much. You're so kind. Take care
Thank you.
now.